Alright, in this video I'm going to be covering a few bearish examples for retest and just good price action following our 9 EMA price action strat with just emerging candles, really not using anything too special. It's just kind of navigating with volume and getting to kind of visualize it a little more till we're more comfortable with it. But the first example I'm going to do of the three is going to be UPST. The other week I had posted this saying a good breakout range would be above 263 if it closes, or below 239.80s, which you can see it did try to close above here, but it was basically just a stalemate right there. You can see the candles just zeroed each other out. Next day closes under with what? Rising volume. Next 2 days, what does it do? Next 3 days, really. All 3 days were kind of a reset candle. This did close lower, but all three of them were basically just to show us weakness. Okay, now this might have been lowering from here to here, and then rising from here to here, but just overall, this was weak volume because it was under our average volume of 30. But what were these levels? If you look over here to the left, these are all emerging candles. I didn't do anything crazy. So you can see I have kind of consolidation before breakout. We have our breakout down here. Breakout, consolidation, breakout, consolidation. So where do you think most volume is going to be sitting? In an area where price was only going up? Or in an area where price has been going up and down a lot in, where there's a lot more time and price action inside of? Which one do you think has a lot more volume? This area. It's kind of more of a volume shelf. So this area should have our confirmation somewhere, right? So since we were a little late to the chart and we had our price action kind of sitting here, I knew that this base about from recent price action was good. What was on the left side? 239.80s, that emerging candle. So I know that it was a good target under 239.80s to this level if it at least closed under. And it did that perfectly, actually. Slowed down 2 days in a row under the 9 EMA with lowering volume, and then pushed even lower to get down to the bottom of that volume shelf. It wants to test the bottom of a range. You guys hear me talk about ranges all the time. Anytime, honestly, gap ranges are really good too because this covers this exact topic, but you'll have them go push up, push down, and then before they push up again, they're going to want to make sure they have that retest there. It's the same thing for bears on the bottom side. When they're going down and there's a good level here, before they just continue dropping to the floor, they're going to sometimes want to go back up and test this real quick and then move lower because it's a sustained move. It won't be as parabolic. A sustained move can go and be a lot more healthier. But let's look at the rest of these examples. MRNA. So the example I wanted to do for MRNA was after we kind of did all those bullish plays. A few people had wanted to get in here. We had said wait. There was one decent opportunity here that failed to push a new high, as you can see over here. And after it did that, it failed to push the new high again right over here. This is what we consider a double top. So we can look for really good bullish breakouts or bearish rejections right here. So it might not be entry point for a bear position right here, but it at least gives me the sign. It gives me the, alright, it's warming up. So after it failed to push the new high and it came down here and broke this recent support from recent price action, as well as an emerging candle from the far left of the chart, you can see it closed with rising volume 3 days in a row, and you had your gaps. These gaps are huge tellers. These gaps are big signs of seller momentum. Anytime, and you guys hear me talk about it all the time with gap ups, it's the same story for gap downs. These aren't just placed in random areas. These are placed perfectly for position of momentum and sellers to just keep flying down. This is very, very strong seller momentum. Okay, so rising volume, pushed under the right levels, followed under our 9, and the gaps give us the story. What is this right here in between? A continuation, consolidation. This is what kind of gave price that reset, that slowdown, that breather in between before continuing. So how could you have seen that before? Because technically it's a bullish harami. Well, one, it failed the 9. It was still under it. Didn't ever push up above it. You had lowering volume as it was slowing down, so that's a good sign. And the next day, gap down. So this gave you extra signal like, okay, I need to be looking to take profits soon, or if you were still holding. But either way, you would know that this is under seller control, not bearish control. Another gap down, you get a buyer reaction. So you can see prices starting to kind of slow up a little bit more here again, and they rounded up. So just a really good bearish retest example for Moderna. And let's look at the last one, DDOG. So here on DDOG, and this was one of the ones we didn't actually, or if we did post this, I just don't remember it, but this will be one of the few that I didn't actually personally trade, but I kind of went through and I wanted to find a good example on. And this is just a really good basic vanilla example. But you can see we have a really good angle here of support. Price kept pushing up onto it. Failed to hold that new high on that double top, pushed down, failed to hold the support. What did it do once it got under the support? What are these candles? Well, this candle, big buy reaction for being gap down so low. If you see, price ended right here. gap down started right here. So it must have dipped a lot lower and then picked back up. So this is considered a buyer reaction. I say that because it's going into an area of just nothingness. So sellers can't really just take it down to nothing. They can scare everyone, but they can't just take it out down to nothing because they need that retest. They need that sustained move confirmation that I just showed y'all. What is this candle? An indecisive long-legged doji. So what do you know you need to see on the next couple candles? You know that you need more price info. What do you get? A very strong bearish engulfing coming back to give you that 3 strike. You come back through, you get a bearish retest with lowering volume, rising volume through that after that, and guess what it does? It makes a new low, meat of the bone. There's no meat of the bone right here holding support. This closed new low with rising volume. Continuation down, continuation down. You can see it gets a little more indecisive right here, so good time to start looking to take profits if you did swing this from up here or down here. But I just really want to go over this example because it covers really, really good price action, just basic vanilla stuff. I don't have a million indicators on my screen, and at any time you want to add something to make this system a little more accurate, you can add the 20 EMA, you can add the 50, the 100, the 200, whatever you want to add that makes you comfortable, but be comfortable. What am I comfortable with? I'm comfortable with just following volume, basic candlestick knowledge, and my EMAs with just a couple of my price action levels from the daily time frame. So find what you're comfortable with, find the type of setups you like the most, and stick with them. Limit yourself to them. You don't need to be trading every day, so limit yourself. That's pretty much a big topic of this besides all these retests, but hopefully you guys find these examples useful, helpful, and I'll continue to post a couple more on this channel. But leave me a thumbs up.